Tax saving tips for everyone. Do you hate paying taxes? Do you wonder if there are deductions that you can claim that miss on your tax return? Hi, welcome to my channel. My name is Andy Chen. I'm a CPA, realtor, and insurance agent based in California. Today my video is going to talk about how to save taxes. Lay out tax saving tips for everybody. It's really important to pay attention and manage taxes effectively. Everyone should know what tax deductions and credits they may be eligible to save taxes. It will help you keep more of your earnings so you will have more money to invest and build wealth. Let's go through the tax tips now. Tax saving tip number 1. You want to maximize your retirement account contributions. There are various types of retirement accounts, but I will mention 3 common ones as follows. The first one, 401k. It's an employer-sponsored retirement plan when you contribute a portion of a pre-tax salary, often with employer matching. The contributions grow, and you won't have to pay taxes until you withdraw the funds after 59.5 years old. The other one, IRA, Individual Retirement Account. This is a personal retirement savings account with tax advantages, same as 401k. The contribution grow tax deferred, no tax until retirement. Roth IRA. I love Roth IRA. It is a type of IRA where you contribute post-tax money, but your earnings and withdrawals in retirement are all tax-free, which could offer a very large potential long-term tax benefit. Tax saving tip number 2. You want to utilize health savings account, or called HSAs, and a flexible spending accounts, also called FSAs. Both HSA and FSA are employer-sponsored benefits. With HSA, if you have a high deductible health insurance plan, you may be eligible to contribute to a HSA. HSA contributions are tax deductible, and qualified medical expenses can be withdrawn tax-free. With FSA, it's similar to HSA, except that it's used for qualifying dependent care expenses as opposed to healthcare expenses. However, there is one big disadvantage with FSA. If you don't use the funds in FSA within the plan year, you will lose it. Tax saving tip number 3. Claim itemized deductions. You should itemize when you have deductions totaling more than the standard deduction amount. The deduction amount for 2023 is $13,850 for single filers, $27,700 for joint, and $20,800 for head of household filers. Things you can deduct are such as mortgage interest, property and state and local taxes, medical expenses, donations, etc. So count out the deductions and itemize if they exceed standard deduction. Tax saving tip number 4. Claim tax credits. There are various tax credits available subject to various requirements and limits. I won't be able to cover all the details here, but let me list them here so you are aware. You should see if you can claim the following tax credits. The first one, child tax credit. You can claim $2,000 credit per child under 17 years old. 2, child and dependent care credit. Generally, it's up to 35% of $3,000 of expenses for one dependent, or $6,000 for 2 or more dependents. 3, education tax credits. There are 2 types. The first one is the American Opportunity Tax Credit. This is for students attending the first 4 years of higher education, up to $2,500 credit for qualified education expenses pay. The other education credit is the Lifetime Learning Credit. It's for qualifying tuition and fee payments paid to a post-secondary school, meaning beyond high school, during the tax year. The maximum credit is 20% of up to $10,000 in eligible costs, up to a maximum credit of $2,000. 4, Earned Income Tax Credit. The maximum earned income tax credit in 2023 for single and joint filers is $560 with no children. The maximum credit is $3,995 for one child, $6,604 for 2 children, and $7,430 for 3 or more children. It's quite generous. 5, Savers Credit. Runs 10% to 50% of up to $2,000 for individuals, or $4,000 if filed jointly in contributions to IRA, 401k, 403b, or certain other retirement plans. The credit depends on your filing status and income. 6. Solar tax credit. It's 30% of the cost of installing a solar power system. Keep in mind, new roof costs can be also added to as part of the total cost of total solar installation. 7. EV, electric vehicle tax credit. It could range from $2,500 to $7,500 depending on the vehicle's weight, manufacturer, and whether you own the car. Tax saving tip number 5. Student loan interest. The student loan interest deduction lets borrowers write up to $2,500 from their taxable income if they pay interest on their student loans. Tax saving tip number 6. You may want to invest in tax advantage accounts. Some investment accounts allow you to save money for free, tax-free, or with tax benefits, such as municipal bonds and 529 plans. The interest income earned from the new municipal bonds are tax exempt. 529 plan. The 529 plan is a state-sponsored investment plan that lets you save money for your beneficiary and pay for their education expenses. The earnings on the 529 plan savings are tax-free when you withdraw the funds to cover for almost any type of college expenses. Tax saving tip number 7. Timing of capital gains and losses. First of all, a capital gain is the profit you receive when you sell capital assets such as stocks, bonds, real estate, etc. Long-term capital gain, meaning over 12 months, is usually better than short-term gain because it's taxed at lower rates. Long-term capital gain tax rate ranges from 0 to 15 or 20% depending on your income. On the other hand, short-term capital gain is taxed at an ordinary income tax rate, which could range from 10% to 37%, which is higher. Tax loss harvesting. If you have investment losses, you could use tax loss harvesting to offset capital gains and potentially lower your tax liability. Tax saving tip number 8. You may want to start a small business. There's a limit on how much individuals can deduct. If you have a business, it opens the door to business deductions. If you already have a full-time job, it's okay. You can still do a side hustle. A side hustle is a business. By having a business, you can deduct home office, utilities, transportation, travel, computer equipment, anything that you may incur for business purposes. Okay, that's it for today's video. Thank you so much for watching. I hope today's video is helpful for you. Hope you are saving taxes now. Please like and subscribe. Stay rich.